Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, November 10th, 2017. I'll try to move a little faster today, so let's look over S&P 500, some of the stock funds, some of the oversold funds, possible breakout funds. We'll look at the bond market in a little bit more details, especially junk bonds and TLT. We'll look at the Forex universe and see if the dollar is already feeling the pressure from short sellers. Gold kind of bounced feebly, so perhaps dollar has further um, upside. We'll look at oil as it breaks the fresh 52-week highs, and natural gas is also breaking out to the upside. Okay, let's start with S&P 500, ETF SPY. First of all, hit the like button, please. It will mean a lot to me. Clearly bullish chart. S&P 500 is at fresh all-time highs. Here is that fresh all-time highs set on Tuesday of this week. So far, I don't see tapping patterns, and advanced decline lines more or less are confirming the fresh highs. So if anything, it's a little bit overbought. Yeah, it's a big move. Pullback is normal, but perhaps a pullback may not even materialize. Maybe we'll just get a flat consolidation. Maybe we'll retest at 254 again, and then continue higher, especially now that we have winter is upon us and December is one of the better months for stocks. Here's S&P 500 on a weekly time frame, and you can see that basically we had nothing but an up move, and notice that we had only black candles. Today or this week finally we have a red candle. Does it mean anything? Maybe it's the start of some sort of a pullback, but notice that the pullbacks have been relatively shallow. The deepest pullback was back in 2016 here, so we'll see how deep this pullback, if it even materializes, how far it will go. QQQ also at fresh all-time highs, fresh all-time closing highs. Notice that even this pullback candles are hollow. In other words, price gap down, and then during the day the gap was filled. So again, clearly bullish charts. QQQ on a weekly time frame, it's an all-time closing high on a weekly basis, so it's as bullish as it gets. I don't see many issues with this chart. Advanced decline lines are doing quite nicely, and once again I don't see too many issues with this chart. IWM Russell, big surge from the August lows, now a pullback. Maybe this is a fallen flag or a fallen wedge. Notice already hammer-like candlesticks at the 50-day moving average, so maybe there are buyers already stepping in. Here's IWM on a weekly time frame, and I put in the pivot points. You can put in the pivot points as overlays. IWM tapped exactly at resistance 1. Notice it was a flat consolidation, now a slight pullback. Now, if S&P moves higher, it is almost a guarantee that IWM will follow. IWM by market capitalization is actually quite small compared to the big dogs like QQQ and S&P 500 top stocks like Apple. Financials. This pullback could be thought as an opportunity, if anything, because I don't see yet any evidence of tapping patterns on financials either. So if anything, this pullback, this shallow pullback, is already an opportunity. Here's industrials, also on a daily time frame. The shallow pullback is, in my opinion, already an opportunity. Most of the selling came from transportation sector. Here's IYT, transports, fallen below the 50-day moving average. Yeah, we're still seeing red candlesticks, but this is a bullish chart because these are all-time highs. So once again, I would only be looking to go long. I would not be looking to short this chart. Here's XLV Healthcare. Looks like we're attempting to bottom here in the 80, 70, $81 area. Notice on Friday here we see a hammer-like candlestick. I don't know, obviously, what nobody really knows, if this low will hold, because it looks like we're retesting the September lows. And then we can say that, oh wow, this is a head and shoulder, so we'll fall lower. You know, those chart patterns have this notorious, property of not working out. So we don't exactly know where the price will go. Nobody really knows this. We're simply looking at odds. Are the odds favoring the bulls or the bears? And in my opinion, the odds are clearly favoring the bulls. So I would not want to short this chart. Here's biotech, very similar pattern to XLV. Maybe biotech is stronger from the just a return perspective, but it is more volatile, so you have to adjust for that. And I teach all of that, how to calculate your position size, how to set up your trading so that you don't lose. The biggest thing in trading is that you have to control your losses. You have to cut your losses quickly so that they don't become big losses. You can let your winners ride, yes, absolutely. You can let them continue higher and higher and higher, but as far as losses, I don't personally tolerate losses beyond my stop. So before I execute a trade, I go, okay, I want to exit. Let's say I'm going to trade this IYT. I'm going to say, okay, where do I want to put my stop? And then once I put my stop, I calculate my position accordingly, and I buy a certain number of shares. And once that certain number of shares have been bought and I know where my stop is, once that stop is hit, I exit like a robot. No questions. So this is how I control my losses. Here's XLP, consumer staples. Very interesting that it kind of, I wanted to show this to you on my elite indicators. Here's XLP with the elite indicators. Notice that 1, 2, 3 times we came down below this light blue or teal line, and looks like the stops were grabbed by market makers, and notice how strong this rally is. So I'm hoping that we'll finally break out above this blue line, which has been acting as resistance around 54.50 or so. So let me show that to you on MasterCharts.com. So the resistance is, where did I say resistance was? At 55 bucks or so. So about here. Makes sense. In any case, during the bull market, so XLP here, yeah, we're closing at below this light blue line, but is it a bearish omen? And during the bull markets, I tend to err on the side of keeping my equity funds versus selling them. So I'm keeping XLP for now. I have a position myself in XLP. Okay, energy, very interesting. So several funds here. I have energy, FCG, which is natural gas related fund, and URA, which is a uranium fund, uranium producers fund. So here's XLE, and this fund is looking very hopeful. Notice we have a 50-day going above the 200-day moving average. So if you're doing a simple trend following system, then this would be a sign for you to buy, basically. Very straightforward system. 50 goes above the 200, we buy. That's all. Some people follow that system. I don't. But, you know, to me, this just adds to the evidence that XLE is leaning more and more bullish. And let me show you XLE using my elite indicators that you could get at MasterChartsTrading.com with a basic subscription right now, currently in November 2017. I'm still giving this away as a part of basic membership. Eventually, it will become a elite membership. But here's the level I'm referring to, and this level is 72.21, maybe 72.50, or like around here, basically. So if I see a close above this line, most likely I will consider XLE as being in a bull market. So another one here on this list is FCG, which is a natural gas ETF. I guess these are natural gas producers. Honestly, I don't know what's in there, but I wasn't even really interested, and now maybe I'll look inside and see what's in this ETF. The reason why I wasn't really interested is because FCG has been hitting fresh lows, and I don't want to be buying a stock which is hitting fresh lows. But now we have this surge here, and this is like a first sign. Okay, very kind of getting a little bit interesting. We closed above this light teal, light blue line or teal line. What I want to see is I want to see a close above, 24.90 or 25 bucks for this fund. And then I'll become quite interested. And here's another one, URA, which is uranium fund. Now these are fresh lows here in October, but notice this big surge. First we have a gap and then an enormous candlestick. Additionally, you can see that relatively speaking, this fund is now performing quite well. So here's URA using my elite indicators once again. And notice that I actually sent out, I published an idea here where I say, okay, we should short this fund. No, short. But now it looks like maybe this is a reversal. It's possible. Nice big volume here as well. So very, very early stages. At the very least, I want to see a close above, 1460. But really, the big test would be if we close above 1650 here, and then I'll be okay. Yeah, maybe we're in a bull market for this fund. To summarize, overall S&P 500 and vast majority of stock funds are in a bull market, and once again, I would not contemplate shorting this fund, shorting this market, well, for a while, definitely not anytime soon. Okay, let's move on to the bonds universe, and here is JNK, our proxy for the junk bond market. So all-time highs here in October of this year. Now this fund, this chart does include dividends. So if you want to take out the dividends, you have to put underscore before the JNK. Notice the chart looks completely different. Now I personally prefer with dividends. I don't know, for me it just shows a better picture, more clear picture. So here's JNK on the daily time frame with dividends all-time highs, and now a relatively sharp pullback a la August drop here. So now we have November drop. Immediately before in August, notice that it was bought up immediately and we saw fresh highs. Are we going to see something along the same lines? It's possible. I mean, look at this volume. Large volume here following a gap, so maybe this is already a selling climax. And notice the next day we gapped and then continued higher and actually closed pretty strong close in the gap area. So maybe this was it. Maybe this was it already. Once again, all-time highs for junk bonds, a pullback. Is this looking toppy? Who the heck knows? I mean, maybe it was looking toppy back here in, October of 2016, and it continued higher. This trend will continue until it stops, and we don't exactly know when it's going to happen. So overall, I still think junk bonds are in a bull market. Albeit right now we're seeing some selling, so perhaps we'll see more pullback before fresh highs are resumed. Okay, here's the investment grade picture, and here's TLT on a weekly time frame. Let's look at weekly first. So 2017 highs right there in August. Again, this is an adjusted chart. If you want to take out the dividends, put an underscore in front of TLT, and notice the chart looks different. I prefer using with dividends, so total return. Okay, so this could look different to different people. Maybe this is a goofy looking W, and if this is indeed a W, then the breakout above 129 would guarantee, almost a guarantee, that we'll see fresh highs, or at least a move of about 4% or so, 5%. So 4%, 5% would put us close to the fresh highs. If we see a move higher for investment grade, most likely by extension we will see a move down for the junk market and also for the stocks, because most likely this would mean that we're seeing fear creep into the market. Alternative scenario is that we just trade sideways. And then another scenario is that we don't hold here and we continue lower. So let's look at the daily chart, and here's the daily chart of TLT. Again, also adjusted chart. So these are 2017 highs, and if we look at it from a point of view of a bear, the bear would say, but look, this is a head and shoulders. This is a left shoulder, a head, and now we have a right shoulder. So if we see a break below 120, 150 or so, then we could see a drop of about 4 or 5%. So 5% would put us somewhere like here, so next to the lows. So this chart is finally poised to go either way, and I guess we could play it with options. We can say we're going to sell it below 122 and buy it above 129. I don't know, something along those lines. My personal bias is to the upside still. Here's AGG on a daily time frame. So this is a basically aggregate bond market, and this includes TLT, and this includes treasuries and corporate bonds as well. This looks to me as a bullish chart because there's a fresh all-time highs. So again, this pullback would be, I would treat it as a bullish setup. Can we drop lower? Of course, absolutely. If the general market for bonds continues lower, then AGG will absolutely follow. But these are all-time highs, and I think this is the dominant feature of this chart. Okay, let's move on. To the Forex universe. Here is US dollar. on a daily time frame. So these are multi-year lows here, and now we're seeing a bounce back. Um, to me, this looks like a classic setup to short, and I can show it to you with the elite indicators. Here's DXY or US dollar index, and to me there's clear resistance around 96 level. But if I was trading this one, I would actually be shorting it now already. So here's US dollar with the same resistance around 95, 96 bucks. Reason being is because this is a support break from June, July, and now we see in a. I don't think this is a bottom-end pattern. I mean, of course, it's possible, like we see a V-shaped reversal, but I still think that the resistance will reaffirm itself. I think we'll see dollar roll over to the downside. Here's British pound versus US dollar on a weekly time frame. Notice this big white candlestick. Looks like, well, British pound is attempting to find support. Here is GBP USD. It's attempting to find support at this blue line around $1.30 or so. And euro, the most important one, of course, here's euro versus US dollar breakout. Well, first we have big rally, 52-week highs, pullback, so a throwback. And now it looks like we're attempting to bottom, and this is a hammer-like candlestick on a weekly time frame. So euro versus US dollar here in the daily time frame using the elite indicators. Basically, I would be buying it, even at the green line, which was at 1.17989, but I would be buying, I would be buying euro using the dollar basically. Now, and especially if it gets to this to this blue line about 1.143, I would put my stop way down at about 1099. So with this system, you have, with using this elite indicators, and you can get those at MasterCharts Trading. What I like about it personally is that you get, even though you're gonna end up trading smaller positions because you see relatively wide stops. I still think that the success rate is much higher than if you put a tight stop. Even though you are going to see a smaller position, you will still make it up because you will have a higher success rate with this system. So let's move on to gold, following the dollar comments. So if the dollar is going to be moving lower, it's a well-known fact that gold does not like strong dollar. So if the dollar will move lower, gold will, well, almost surely will move higher. Here's gold and US dollar pretty much inversely correlated. So if one goes up, the other one goes down. Here's gold in a daily time frame. Relatively choppy chart, kind of difficult. If you see nothing else, if you look at this chart from just September, October, November, it looks terrible because it goes nowhere. But from a longer term perspective, the most important thing and dominant feature of this chart, I think, is the 52-week highs. So here is the same chart using gold futures on TradingView, and again with the MasterChartsTrading.com elite indicators. So notice where it's bottoming. It's bottoming exactly at this blue line. Now, if we break that line and we continue lower, then I think the line in the sand would be 1213 or around 1200 bucks. And I think if we get there, I would avoid gold at that point. So here is that basically $1,200 level. Pretty good obvious support there from 1, 2, 3 bottoms. If we get to 1200, I think it could be either a buying opportunity or another, or a before a collapse, like a quiet before a collapse lower. So my personal bias for gold is currently bullish. I actually have a gold. I have GLD open myself. I opened it relatively recently, and basically I'm hoping for a fresh breakout to the upside. GDX, here's GDX on the weekly time frame. Not really doing much. Actually, I want to say that since most of this year, GDX have been kind of range bound. I guess you could do another options play maybe if you have a breakdown below 21 and a breakout above 25, 26 or so. I guess you could see a move, you can play those options. Here's GDX on a daily time frame with some of the indicators put in. There's advanced decline lines, advanced decline volume lines. I don't see too many problems with this chart. I don't see any outright bearish divergences. We're getting there. Like if we see any more downside, I think we'll get a bearish divergence, and then I wonder if we will retest the $21 area. But overall, I think that gold is in an uptrend, primarily because of the fresh highs here. Okay, let's move on to hard commodities. Here's West Texas Intermediate light crude oil. Up until beginning of October, I still thought that oil was in an downtrend and I should be shorting it. I shorted oil last time on this candle right there. End of September, it went in my favor, but then there was a gap against me. So I closed my position like right there. And it was a good thing because look at this rally. It broke out to fresh highs, and I would have been stopped out by stop at a loss. But in this case, actually, okay, I made like 25 cents, I think. But the point is that at least I avoided a relatively large loss. So right now, oil seems to be in an uptrend. There's a fresh highs, 52-week highs. So I will probably look for a buying opportunity, but I need a pullback. So I want to see where would I want to be buying oil. And here's oil futures. Using the elite indicators again, MasterChartsTrading.com elite indicators. So a first pullback level that I would be watching would be at 55.26. That would be a good place for me to be buying. An even better place would be around 52 bucks. Now, energy XLE is also moving higher in response to higher oil prices. So let's look at XLE also through the eyes of this elite indicators, and XLE is really looking, it's working towards that bullish flip, towards the bullish market basically. So this is a fresh 52-week lows here in August. Now a big rally. Notice how it kind of hung around this blue light teal line and went down, but then it gapped back up. So the behavior currently is consistent with a bull market. What I really want to do is I want a confirmation, and the confirmation for me would be a close above 72.21. 72.21 is like right there. It's off the chart on this one. Finally, natural gas. If you knew nothing about natural gas and you looked at this chart, you would probably be scared because I don't see any good patterns. It just kind of goes back and forth, back and forth. So the latest back and forth is that we see a gap and a run higher. So I suggested last week that if you have an account that can be that you can trade options in, is to do a breakout play. You know, you'll see either a breakout above $3.19 or so. Well, let me see what the high here. The high is $3.20, so above $3.20, or break down below $2.75. So it looks like this week we see a breakout by natural gas to the upside. So it now appears that if you were doing this options play, then you would be, buying this option, a breakout option. Overall, it's difficult to say where natural gas is going. I'm mildly bullish, but that's about all I can say. All right, that's it for this week's recap. Please hit the like button. I really appreciate if you would do that for me. If you have any comments, please comment below. Also, of course, share this video with others who might benefit from it. Once again, I wanted to point out that I will be very shortly starting a elite trading service. I already have the basic trading service going, and currently if you sign up you will also receive elite. Now what we do in elite, we trade in addition to ETFs that we usually trade for basic, we trade also stocks, and I personally have a lot of interest in dividend aristocrats, so I use quite a bit of dividend aristocrats in the elite service. But also we've been trading like some of the just really wild ones. So for example, here's Overstock, and I entered myself here in September, sold half here, sold a quarter of the half of the remainder here, and it just continued. So my position is actually up like over 100%. So some of the stocks we trade are of the volatile variety, but of course we also trade less volatile, like for example, let me think what's a good stock. Well, here's gap, and this is my position as well. Notice that I'm currently in the minus, but notice that the last two candlesticks were quite strong, and I think this is a breakout play, and I think it might continue higher. So anyway, several of the interesting setups I just showed, but we have lots of good feedback from the subscribers, so do consider signing up at MasterCharts Trading. Thanks for watching and have another great trading week. Bye bye.